Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on the semiconductor space here, NVDA AMD and MU daily weekly. So NVDA here has a very tight range to be watching, and it's pretty much in between the 50-day moving average support, which is 102.79, and the 100-day moving average resistance, 104.87. This 100-day keeps coming into play, with it holding as support for 4 days and then becoming resistance and rejecting the price 2 times here. So the bulls are wanting to see a break of 104.95, the high of this little bounce attempt back at the end of last week, and a close over this 100-day to resume short-term strength. And the bears want to see a loss of the 50-day and a break of 102.56 to be looking down at the gap fill of 101.79. The longer-term pattern that I'm watching here is our high, the low of the dump, lower high on the bounce, higher low just barely, almost a double bottom. We could even call this a bit of a descending triangle pattern with a horizontal resistance line and then lower highs heading down to it. If we do break 102.56 and head towards this little gap fill, that would make this descending triangle pattern a lot more likely as we watch that range tighten up. So it is important this next week, starting early, the first couple days, as to which direction we're going to be breaking out of this tight range that we've seen for the past 3 days here. We did end with a little bit of bullish momentum with SPY closing up right near the all-time high back on Friday, but you can see NVDA didn't really see too much benefit from that. Certainly closed strong, but overall on the week, didn't really put much dent into what the bulls were trying to accomplish. The weekly middle Bollinger Band is still resistance at 105. We rejected from that, unable to close above it. And you can see the pattern here a bit better. And actually, why don't I draw it out for everyone? We've got our horizontal base of support line here just at that 105 level. Drop that down a little bit, pointed that too high. Then we've got our descending resistance line, and making sure no weeks are closing above it. We rejected last week. We're rejecting this week. We can stay within this for another 3-4 weeks or so, but it is a tightening pattern, and it does fit the descending triangle description as of this point. So watching very close which break we get short term, and we'll be watching for a move down into the upper 90s to the mid 90s if we break 102.56. AMD on the daily time frame has that all-out dump. It certainly negatively affected the sector, and we're trying to build a base of support here down at 985, 994, and 9. Let's see, we had that two bottoms at 994, so a double low there. So that's a key short-term level that left us with multiple inside bars in a row. So the range on Wednesday, we have the range Thursday fitting completely within Wednesday, the range Friday fitting completely within Thursday, and if we zoom into the hourly time frame, that's going to look like an equilibrium on the hourly with higher lows and lower highs with that double low on Thursday and Friday. If we get a break of 1026, that gives the bulls momentum in the short term. If we get a break of 994, we're looking down at the 200-day moving average in the low 980s. So tomorrow, make that Monday, is going to be a very important day in terms of short-term direction. You can see the volume is dropping off as we see this tightening equilibrium pattern, and that break is imminent. The weekly time frame certainly favoring the bears, losing that middle Bollinger Band for the first time in over a year and taking out a bunch of key support levels. The next weekly support is down at 942. So we would be looking towards that level. If we lose the 200-day moving average, the 942 level would be the next target. MU bulls close very strong, stronger than NVDA, relatively speaking, to Wednesday through Friday, and that's because we broke the high of Thursday. So 28.16 has broken. The bulls are in control of this trend, and they shifted the trend as soon as we got over 28.08. We broke that lower high pattern, formed a higher low on the back test of the middle Bollinger Band, and now the bulls need to break 28.38 to see continuation to the upside with the next level, 28.86, 28.91, just under that 29 psychological point. So the bulls rejecting from the middle Bollinger Band, turning it into support, back testing and holding it, and now looking for continuation to the upside. The weekly chart is the strongest of the three right now after AMD lost its lead of being the strongest chart. MU is now the strongest, with the higher low and higher high pattern still intact, the exponential support still strong and holding, and fending off this bearish MACD cross if we can see that bull break this coming week. So as of right now, in terms of strength on the daily time frame, it's MU number 1, NVDA in the middle, and AMD after the dump is the weakest, but there still is a potential short-term bull trade to be had there if we get a bull break of that inside bar. I appreciate you watching. We'll check back in over the coming week. Always watching NVDA as it is the most popular trader, at least among our members, and we'll check in on this sector every weekend still. So I appreciate you watching. Have a great rest of your weekend. We'll see you soon.